Hey there, YouTube family. This is Josh with Stocks with Josh. Today I'm with Mr. Jones
What's up, good people?
in the Stock Up studio. We're going to be talking to you guys about Disney. What's going on with Disney? The stock has been dropping, like they say, like a hot knife.
Drop it like it's hot.
We're going to talk to you about what is wrong with Disney. What is Disney doing wrong in their management? But what are they doing right? And what do we think? Where do we think the stock price is going to go? Larry, real quick. You know, we've talked about Disney in the past.
Yes, we have.
Right? I'll be honest. Let's just. I mean, we're both bullish on Disney
Yes,
overall.
absolutely.
But Disney's not been a great investment in the last couple months.
No,
What are your thoughts?
Well, there was two main things that started bringing Disney down. One was Netflix first. Netflix cut Disney off at the legs. It was guilt by association, right? Because of the streaming, right? But we also know that Netflix basically has one stream of revenue. Netflix has more than you can count.
Disney.
Disney has more than you can count, right? Disney Plus, which is going to be doing well. The movies coming up, you know, all of the parks. They own ABC. They own the sports channel. What is that?
ESPN.
ESPN. They're getting into the metaverse. I mean, it's just a whole...
They own all the brands that we love. They own
do.
Americans, branded history.
Absolutely.
You know, Star Wars and
Star
Marvel.
Wars,
and-
Marvel,
Yeah.
all of that. Pixel. I mean, it's just... Do they own Pixel?
Yes, they do.
Yeah, so they own all
Pixar.
of these Pixar. So they have all of these different streams of revenue. But back when Netflix was tanking, it took every streaming service down with it because it tanked so bad, right? And we were in a bear market. Then they got into the political, don't say G word. All right, I'm gonna just say that because I don't want to get flagged. And so they made a political stand. And now they have this battle going on with Florida's governor, right? And that's not going to end well for either party, I think, because you got, I think it's like $1.8 billion that goes to a county that they have to take. So that's a whole long story. We can talk about that later. And so Disney has just been tanking in a bear market like a lot of big stock, right? And it being such a blue chip company, they're going to be around. And there is buying opportunity, and these are some prices that you're going to look at down some years down the road and go, I probably should have been buying right there.
Yeah. Real quick, I want you guys all to hit that like, the subscribe, and the notification bell, and check in the comment section. My thoughts real quick, Larry, on what's going wrong with Disney. Disney, this is where we have really a fiduciary responsibility on the part of these long-term investment funds. So Disney has had problems with their cash flow that related to COVID.
Yes.
They lost a ton of money.
did.
And here's the issue, okay? They were going like, 0 to 60. I mean, everything was dialed in.
Yep.
Profit was getting higher and higher and higher
Yep.
every year.
Every year.
And then COVID came around. Now, here's the concern that the investors have. It's not Disney. It's not their products. It's not even their management. It's not even the don't say G word, okay, as much. Those have affected
Those
it.
have affected
Those
it
affected.
negatively.
But the biggest concern is that the investment groups want to know the cash health and how management really did and how quickly all of these are going to go back to reaping high rewards.
Right.
These guys were giving a dividend. They stopped with the dividend. These guys were buying back stock. Then they started to sell stock.
Yep.
Right. And so the question is, does all the investment class, you might say investment groups, do they really know what the true health of Disney is?
Right. But what started it was Netflix.
Yes.
If you go back, you can chart it. You can go back. There was a lot of things that happened leading in. There was a lot of catalysts. They just call it the tank.
Yep.
Now in this segment, now that's the issue. Because that's the biggest issue. It's fallen so far. Plus we're in a bear market. It was going to fall anyway. And there were these caveats that happened. Another thing that happened in 2021 is they did not get their international travel. They didn't have their international travel like they have had all the previous years, because there's countries like China and other countries that were shut down, right? Countries that never reopened like America did. So they lost that extra revenue from international travel too. So that cost them for 2 years. And this will be the first year that they're fully open for international travel. So that was another stream that they're missing. So it goes to your point about how cash flow and how fundamentally sound the company is.
Which the investors won't know
exactly
until we get some more reports. We had the one.
Yep.
Now we need August.
Yep.
Right? And then we're going to be like, okay,
right,
maybe they're doing better than we thought.
I think we're going to need 2 more to see the health of the company.
Now, here's the question I have for you, Larry, and we have not talked about this off camera, okay? But is there enough? So here's what was happening with Disney, okay?
Right.
They were killing it. Revenues were going up.
Yep.
They had, everything was positive and rose-colored glasses. But now they've got some problems. COVID was fundamentally what really brought them down, right?
Yep.
Now it's all the investors are looking at the books. How are they looking? But can Disney get back into that powerful revenue producing mode that they were in before the potential of a coming recession?
Yeah.
That's my question for you.
Is
it worth investing in? Are they going to go from where they're at $100 roughly,
right,
back up to 180, only to bleed back, or 190 or 200?
Look at that. It was at May 4th. It was 200. May 8th. It was $200.
Is it going to go there, or is it going to stay low and recover sooner during the recession after we've had 6 or 8 earnings reports?
Not this year. It's not getting back to 200 this year.
All right.
I'm seeing Disney around 140s.
It's interesting. Yeah.
Yeah.
I'm similar.
Yeah, I see Disney at 140s, and I think that's going to be a fair value.
All right, we're going to jump in the charts. I'm going to look a little bit at what to expect there and how they're performing. Larry, before we do that, I wanted to share with everybody what's going on with our plan with Moomoo and Webull.
Yeah.
You guys know that in the description of this video is the Moomoo link. I'm doing the small account challenge with Moomoo. You download that, you put in $200, and we've been trading Verb from $200 to $400. Our ultimate goal there is to build up to $2,000. We're through savings and successful trade swings. We want to build that up to $2,000 so that we can short the market, probably shorting QQQ. We'll see. We'll get down the road and look at it. But that's the goal for that account. It's sort of its own little nest egg. And in our conversations, Larry's been talking about doing what with potentially Webull?
Well, Webull has a promotion going on right now that, listen, it's just insane not to take advantage of it. 1 penny. All right, I always say $1. 1 penny, you get up to free, you're going to get 6 free stock worth up to $12,600. But at a minimum, you're going to get $36.
No, Larry, I got to share something with you.
Yeah.
I have never played the lottery a day in my life. Never bought a ticket. I never pulled a wheel on one of those slot machines. Okay? I did a gambling analogy on Monday's video, and Ron called. I told them.
I was going to say I did, but it was Ron Lewis. We got a friend named Ron Lewis. He's the one that got me to do it.
So on Monday's video, I told everybody that a roulette wheel had the colors of red and green. Ron called me up. He's like, Josh, no. It's red and black. It's red and black, brother. He said, there's a couple green on there. I was like, man. But here's the point. I'm not a gambler, okay? But if my version of gambling would be to download Webull and Moomoo.
Both.
And you can potentially get... thousands of dollars of stock from each of them.
Now, let me tell you this.
But you're guaranteed...
You're guaranteed $34 for 1 penny.
That's the only gambling you'll ever hear Josh Nichols do is to download a link.
And we're going to have specific things we're going to do with Webull, because you guys do know that you could swing trade. We use Webull to swing trade stocks and crypto. Most of the main crypto we're talking about, including Solana, is in Webull. So I use that to swing trade. All right. And then with Moomoo, they actually gave your boy the choice to pick Lucid for you guys. And so far, they've extended this to us, and they may be extending it to other influencers, but they let us lead out. And so, hey, take advantage. We're working hard for you guys.
I want to say, guys, you're on my page. You might think you're on Larry's page because his banner's in the back and his face is here. But if you're not subscribed to Stock Up with Larry Jones, then in the description of this video is a link to his page. Go over there and subscribe. You need that fundamental knowledge.
Thank you. The check is in the mail. That's Josh, right?
Yeah, Jay Nichols.
Okay.
Jay Nichols. All right, guys, I want to get into the charts on Disney. Let's go ahead and jump right in on that. Okay, guys. I just want to point out to you that from our all-time high, we are down 51%, right? And this is really, and why is that relevant to me? Because these are sort of the big companies, and the bigger tech companies like Facebook, they came down into a range of 70-80% from their all-time highs, but all of the companies, great companies like Disney, have been hit. Their range has really been between 40 and 50%. Okay, and so we're there at that 50%. This, you know, if you got burnt on the way down, I know that a lot of you guys are not excited about reinvesting in something you've lost money on.
Yes,
but oftentimes making strong decisions in regards to a potential loss is where you can recover money you may have lost. But I really am looking at Disney entirely differently. I personally am a buyer at the $100 mark, and I'm a long-term buyer, which means that regardless...
This is an investment.
Yeah, it's an investment for me. Regardless of whether we get back up, I actually agree with Larry. In the meantime, I see us easily getting to 130.
Yeah.
Personally.
Yeah.
If it jumped up to 140 because the market was doing well, that wouldn't surprise me at all.
Right.
But I'm going to tell you that I have to be a buyer at these current prices, and I would even say that we're likely to see a nice pop for the option plays potentially in August. Now, I'd be careful with those, because if those earnings don't come out well, we're going to go right back to $100 pretty quickly.
Real quick. Yeah.
Any other final thoughts?
That's it. We're going to keep this one short.
All right. Hey, man, we appreciate you guys letting us be part of your financial journey. Hit that like, throw in a comment, say hello, and what are your thoughts, Larry?
Hey, make sure you guys hit those links below. We want you guys to partake of these values that we've been working hard to get you guys. This free stuff, and we need these platforms so we can make money. Right? Live, love, laugh, and learn is what I sign off with.
You all have a great day. Thanks for being here.
Be blessed.